Hard to believe, as we talked about our Q3 sales, that the story for the first 7 weeks of Q3 was really around the bushfires. And the final 6 weeks were about COVID-19, as have the last 3 weeks, or the first 3 weeks of Q4. Yes, but it was could you imagine a more challenging quarter? I don't think so.
You say, I think you should come out of this stronger, but what about the costs? I mean, how many are likely to be temporary?
Well, look, our aspiration is to be stronger, but we have to continue to work on that. And our key narrative was focusing on doing the right thing, being the most important thing for us to do. A lot of the costs that we've put in, and there was a sort of a very interesting conversation with the analysts on whether the costs were a function of the increased sales or not. Most of the costs are actually not a function of the increased sales. They're a function of social distancing, hygiene, broader safety type issues, and so there are investments in those kinds of things. They can be unwound, but we want to take a very cautious approach to unwinding them, just to make sure we don't go into a double dip type scenario with COVID-19.
As we move through this, of course, people apparently have tightened their belts. I know Coles is moving to a heavier weighting of a private label. Is this going to have more pressure on the price side of things?
Well, to date we haven't seen it, but that's been as much a function of out-of-stock issues where people have had not the choice to buy the value product necessarily. So value has not been the big issue in the last 9 weeks of COVID. It really has been around convenience, in particular home delivery and safety. That's been the real focus. But it's reasonable to expect that there'll be a much bigger focus on value going forward. That said, there's also a very interesting trade-off right now with Australian made. So we need to sort of figure out how we navigate between Australian made and delivering in low cost and try and bring them together, which I think is a really important and interesting challenge for us.
Brad, we're here at WooliesX, your digital business. You talked about rising costs here and indeed fast tracking of investment. How's that going? I mean, is there an upside here?
Every cloud has a silver lining, but in this case, I exaggerate it, but I don't think by much. The last 3 months have been like 3 internet years in terms of digital engagement more broadly, and then e-commerce specifically, and within that home delivery. And our customers have had enormous demands from us in both of these areas. We haven't managed to quite meet their expectations yet, but that's something we're working on. And it's amazing what a crisis does for a team, you know, just agility, making rapid decisions. So as I stand here today, we have twice the home delivery capacity we had before the crisis. And that has happened in the very short space of 9 weeks, which has been an incredible team effort. But we do expect to see an elevated level of demand for digital, for decision-making, planning, inspiration, as well as e-commerce, in particular home delivery.
And you're now combining some of the new customers that you've gained, perhaps more vulnerable ones, with your older customers returning.
Yes, well, we've unfortunately during the crisis deliberately but unfortunately focused on vulnerable Australians, which tended not to be existing home delivery customers, and we had to prioritise them over our traditional loyal customers, for which we continue to apologise to those customers. But now hopefully both groups are coming together and we have enough capacity to meet the needs of both groups.
People make comparisons with Coles, of course, but you've got a lot more moving parts. Now, Big W's sales were a lot stronger, and you say you're going to make a small profit this year.
Absolutely, that is still our intention. It was a very pleasing quarter on sales, just over 9%, built on 8 quarters of previous comp growth, so that was very pleasing. The challenge we've had in Big W is not that people are not shopping us, but they shop in slightly lower margin categories, more hard goods, everyday needs, leisure and entertainment. So the key for us in the next 8 weeks is to see what the onset of this chilly weather, and it's nice and chilly as we're speaking today, will mean for our apparel business. But certainly our expectation is a profit this year.
And then, of course, there's the pubs portfolio, Brad. What do you think this is all going to do to the timing of the sale of your pubs? I mean, we're a long way from a heaving NRL pub night at the finals, aren't we?
We are. Look, we supported the government wholeheartedly in shutting down our venues as part of an overall move to make Australians safe. But it is clearly a drag on our financials in the order of $30 to $35 million of losses every month. That said, we are playing a team game here. Whenever it's safe to open, we look forward to them opening. When they do open, we don't expect them to go back to what they were before, certainly not in the short term. There'd have to be a lot of social distancing rules.
So what's it going to do to the timing of the sale?
It's definitely delayed from this year to next year, from calendar year 20 to calendar year 21. Again, if there's a silver lining in this, we get to work much more closely between Woolworths and Endeavour to set up our partnership agreements, to get all the right stand-up functions done in Endeavour, so we're ready to go when the opportunity presents itself.
So with all this busyness, everyone's focused on what this will do to your final earnings. Now you're a month into the final quarter on sales. How's it going? It
was interesting. Our sales announcement, we counted the questions. 9 of the 12 questions were cost questions in a sales announcement. So we know the market, of course, is looking at the incremental sales that we've very deliberately put into the business and what that means for us on the end of the financial year. It will be determined, of course, to what extent the government asks us to unwind some of our social distancing and hygiene practices. But it'll be materially driven really by what the sales look like for the rest of the quarter. We've never called a number with less data. We only had 3 weeks of data when we talked about being at mid-single digit growth. We'll see how that plays out over the rest of the quarter. Our expectation is mid to single high digit growth as we get more into a rhythm, or the new normal as we've liked to call it.
But if you do get your sales in the mid to high single digits, will you be able to pay a dividend?
Absolutely, Tiki. No, we're very privileged not only to be able to be part of an essential service of serving Australia, but having a very strong financial series of settings right now.
Brad Banducci, I haven't even asked you about toilet roll. Thank you very much for joining me.
Thank you for supporting us.